Hi friends, in this video I will be answering your question on what is CGST, SGST and IGST. CGST is an acronym for Central Goods and Services Tax. Similarly, SGST stands for State Goods and Services Tax and IGST is a short form for Integrated Goods and Services Tax. Before we move on to further sections, let me give you a quick recap of how GST originated. Before GST came into picture in July 2017, several state governments and the central government separately levied and collected various types of taxes. For instance, state governments made revenue by collecting taxes such as VAT or sales tax, purchase tax, entertainment tax, luxury tax, and so on. Whereas the central government independently levied and collected taxes such as central excise duty, service tax, additional excise duty, special additional customs duty, and so on. It had administrative and compliance related issues such as tax on tax effect, which means that the tax paid to the state could not be used as credit to set off against the tax payable to the centre. All these taxes got subsumed under GST starting from 1st July 2017, allowing easy set off of tax credits. Therefore, a dual GST model was introduced in India, allowing the centre and the states to levy and collect GST. Further, GST is a destination-based tax where the consuming states get to keep the taxes after the centre gets its share. If you find this video informative and interesting, please do hit the like button and share this video. In other words, GST revenue once collected must be split between the centre and the states. That's when the components of GST such as CGST, SGST and IGST come to play. Additionally, compensation cess must be charged on the supply of sin and luxury goods. Accordingly, separate legislations were passed to implement GST. These will help in deciding which component of GST must be charged depending upon the supply of goods and services is within the state or across the states, which in turn depends upon place of supply. Let's go through each component one by one. The Central Goods and Services Tax is a component of GST levied on the intrastate supply of goods and services. It is charged exclusively by the central government and governed by the CGST Act. The maximum CGST rate for intrastate supply cannot exceed 14% as per Section 8 of the CGST Act. Along with CGST, SGST also gets charged. State Goods and Services Tax is a component of GST levied on the intrastate supply of goods and services. SGST is charged by the respective state governments and governed by the respective SGST Acts. SGST rate is approximately same as CGST rate and both these together will be levied on an intrastate supply. UTGST works in the same manner as that of SGST. UTGST is nothing but Union Territory Goods and Services Tax. The Integrated Goods and Services Tax is a component of GST levied on all the interstate supply of goods and services. It is also charged on imports and exports. However, since exports are zero-rated supplies, the taxpayers can claim the refund of the IGST paid subject to some conditions. The IGST is collected by the centre and distributed in equal proportion to the respective consuming states. It is governed by the IGST Act. The IGST rate is equal to the total of CGST and SGST rates. For more information on how the set-off of CGST, SGST and IGST works, along with examples, please visit our page, the link given in the description box below. Feel free to post your doubts in the comment section below and don't forget to subscribe to Clear Tax channel. This is Annapurna. Thank you for watching this video.